Welcome. Today is January 13th, 2026, and the stock market is on edge. Uncertainty is everywhere: economic, political, and financial. The market is juggling inflation, the Federal Reserve's next move, and the start of earnings season. On top of that, a criminal investigation into Fed Chair Jerome Powell is shaking confidence in the institution meant to keep our economy stable. This rare mix of events has investors pausing, unsure of what comes next. Over the next few minutes, I'll break down what's happening and why it matters to you. We'll cover inflation, the Fed, bank earnings, and the Powell investigation. My goal? Help you understand the headlines so you can make smart decisions with your money. Let's dive in. Let's start with inflation. Simply put, inflation means your money buys less than it used to. Over time, the same dollar that once filled your shopping cart now only covers a fraction of what it did before. This slow erosion of purchasing power is something we all feel, whether we're buying groceries, filling up our gas tanks, or paying rent. It's why groceries, gas, and rent cost more over time. Even if your income stays the same, the rising prices mean you can afford less. This is why understanding inflation is so important. It affects nearly every aspect of our daily lives, from the essentials we buy to the services we rely on. To measure it, we use the Consumer Price Index, or CPI, a shopping basket of what families buy each month. The CPI tracks the prices of hundreds of everyday items, from bread and milk to clothing and medical care. By comparing the cost of this basket over time, we get a clear picture of how much prices are rising or falling. If the basket's cost rises, that's inflation. If it falls, that's deflation. The CPI helps us see these changes in real time, making it a crucial tool for everyone from policymakers to families planning their budgets. The CPI is the official report card for the cost of living in America. It's compiled by government agencies who gather data from thousands of stores and service providers across the country. This information is then analyzed and released to the public, giving everyone a snapshot of how much life is getting more or less expensive. Investors watch it closely because it signals where prices and profits are headed. A higher CPI can mean higher costs for businesses and less spending power for consumers, which can impact company earnings and stock prices. If inflation is higher than expected, it can spook the market and force the Fed to act. The Federal Reserve may raise interest rates to try to slow down rising prices, which can affect everything from mortgage rates to credit card bills. If it's cooling, optimism returns. Lower inflation can boost confidence, encourage spending, and help markets rally. The CPI isn't just a number. It's a reflection of your daily expenses. It shows how far your paycheck goes and whether your standard of living is improving or slipping. Understanding it is key to understanding the market's mood. It helps you make sense of headlines, investment decisions, and even personal budgeting. The CPI is the foundation for everything else we'll discuss. It's the starting point for understanding how the economy affects you, your investments, and your future. Today's Consumer Price Index report for December 2024 is out, and it shows that prices have risen by 2.7% compared to this time last year. That's exactly in line with what many economists and policymakers were hoping for, and it suggests that, at least on the surface, inflation is stabilizing after a turbulent couple of years. But as always, the headline number only tells part of the story. The real focus for experts is on core inflation. This measure strips out the often volatile prices of food and gas, giving us a clearer picture of underlying trends in the economy. Core inflation is what the Federal Reserve and most analysts watch most closely, because it's less likely to be swayed by temporary price spikes or drops. This month, core inflation ticked up to 2.7% as well, which is just a bit higher than last month's reading. While that might not sound like a big jump, it's enough to catch the attention of markets and policymakers alike, especially since the hope was for core inflation to keep drifting downward. Investors are feeling uneasy, and for good reason. When inflation proves to be sticky, meaning it doesn't fall as quickly as expected, It can signal that the forces driving up prices are more persistent than previously thought. This uncertainty is reflected in the nervous energy on Wall Street and in financial markets around the world. Some analysts believe last month's lower inflation numbers may have been a fluke, perhaps influenced by seasonal factors or one-off events. That's why this month's uptick feels more significant. It could be a sign that inflation pressures are not fading as quickly as hoped. For everyday people, sticky inflation means that higher prices for groceries, rent, and other essentials are sticking around longer than anyone would like. Business owners are also feeling the pinch, as rising costs eat into profits and force tough decisions about hiring and investment. For the Federal Reserve, this report adds a new layer of complexity. They're now faced with a tough choice. Should they keep fighting inflation by holding interest rates high? Or should they shift focus to supporting a job market that's starting to show signs of slowing down? This single inflation report has sparked a major debate among economists, investors, and policymakers about what the next steps should be. Should the Fed stay the course, or is it time to change direction? The answer isn't clear, and the stakes are high for everyone. As a result, the market is watching every move, every statement, and every data release with heightened attention. Even small changes in the numbers can trigger big reactions. All eyes are now on the Federal Reserve, as their next decisions will shape the economic landscape for months to come. The pressure is on, and the world is waiting to see what happens next. The Fed is the economy's doctor, using interest rates to keep things healthy. When inflation is high, the Fed raises rates to cool things down, making borrowing more expensive and slowing spending. Recently, the Fed started cutting rates as the job market softened. But with today's sticky inflation, the Fed faces a tough choice: keep rates steady or act to fight rising prices. Most expect the Fed to pause and wait for more data. But the pressure is on, and every word from the Fed will move markets. Their decision affects everything: stocks, mortgages, and your wallet. The stakes couldn't be higher. And now, politics are making things even more complicated. A criminal investigation into Fed Chair Jerome Powell has rocked the financial world. The official reason is a dispute over renovation costs, but many see it as political interference. The Fed's independence is crucial for economic stability. Political pressure undermines that trust. Former Fed chairs and even some Republicans are warning this could damage the Fed's credibility. If investors lose faith in the Fed, it could mean higher inflation, a weaker dollar, and more market turmoil. This drama adds a new layer of uncertainty just when the economy needs stability. The world is watching closely, and so should you. It's also the start of earnings season, when companies reveal how they're really doing. The spotlight is on big banks like JPMorgan, Bank of America, and Citigroup. Banks are the economy's heart. If they're healthy, it's a good sign for everyone. Investors look for clues in these reports. Are people paying their loans? Are businesses borrowing? Strong bank earnings can calm nerves and boost confidence. This season is especially important with all the uncertainty swirling. If banks show resilience, it could steady the market. Everyone's hoping for good news. JPMorgan kicked off earnings season today, with more big banks reporting this week. Investors are watching for loan growth and how much banks set aside for potential losses. If banks are cautious, it signals concern about the economy. Bank CEOs like Jamie Dimon offer valuable insights. Are they worried or optimistic? Their outlook can move markets as much as the numbers themselves. A strong showing from banks could reassure investors that the economy's core is solid. It's a crucial test of resilience. The market is listening closely. Oil prices are quietly rising, adding another twist to the market's story. U.S. crude is near $60 a barrel, and Brent crude is even higher. Higher oil means more expensive gas and shipping, costs that hit your wallet and fuel inflation. The main driver? Geopolitical tensions, especially in oil-producing countries like Iran. Any threat to supply sends prices up, even if demand stays steady. Rising oil prices help energy companies but make the Fed's job harder. It's a reminder of how global events impact your daily life. Oil is a wild card in the inflation fight. The market can't ignore it. Every headline matters. We've covered a lot. Everything from inflation and the Federal Reserve's latest moves to political drama in Washington, bank earnings, and the ever-changing price of oil. These topics might seem distant or abstract, but they're not just headlines or numbers on a screen. They're the forces that ripple through the economy and ultimately shape your daily life in ways you might not even realize. It's a lot to take in, and it can feel overwhelming at times. But understanding how these forces interact is the first step to taking control of your financial future. Every decision made by policymakers, every shift in the market, and every global event has a way of trickling down to your household budget, your savings, and your peace of mind. Take inflation, for example. It's not just a statistic. It's the reason your grocery bill keeps creeping up, or why you might have to make tough choices at the checkout line. Rising prices affect everyone, from families planning meals to individuals saving for a big purchase. The Federal Reserve's decisions on interest rates don't just matter to Wall Street. They directly impact your mortgage payments, car loans, and even the interest you earn on your savings. A single rate hike can mean hundreds of dollars more or less in your pocket each year. The health of our banks is a reflection of the economy's strength and your own financial security. When banks are strong, credit flows, and businesses grow. When they're shaky, it can mean tighter lending and more uncertainty for everyone. Political uncertainty, whether it's debates over policy or unexpected events, can shake the markets and, in turn, your retirement savings. It's a reminder that your nest egg is tied to forces far beyond your control. So what should you do when the headlines are swirling and the future feels uncertain? The answer isn't to panic. Instead, focus on what you can control. Stay disciplined, keep your emotions in check, and remember that financial resilience is built over time. Start by paying down high-interest debt, building an emergency fund to weather unexpected storms, and continuing to invest for the long term, even when the market feels shaky. These habits are your best defense against uncertainty. Remember, uncertainty will pass. The habits and discipline you build now will make you stronger and more prepared for whatever comes next. Lean on your support system, and don't be afraid to ask for help or advice. You can't control the Fed, oil prices, or global politics, but you can control your spending, your saving, and your investing. Small, consistent actions add up over time and put you in the driver's seat of your financial journey. Knowledge is power, so keep learning, stay curious, and use what you know to make smart choices for yourself and your family. The more you understand, the more confident you'll feel, no matter what the headlines say. Stay strong, stay smart, and stay secure. Your financial future is built on the choices you make today, and you have more power than you think. The market may be holding its breath, but you don't have to. Take a deep breath, stay focused, and remember, you're in control. Thanks for watching.